Let's just take a very quick look at what the Nifty is doing. It's going to come up on your screen, 16 points, 9932. There is a big sort of climb down which has happened since we opened earlier. Let's bring in Manisha, who's with us, to get us a roundup of all that's happening in the commodity and currency space. Manisha, good morning.
Hi, Prashant. Thank you so much for that. There's so much happening in the international markets from what we are taking cues from. And amidst all of this, you have the US dollar, which has seen a bit of a decline. The gold prices are holding around those one-year highs. And the markets are awaiting the European Central Bank monetary policy meeting today in the evening. The expectation is that you would see some clarity on the bond buying program from there on. And that is what the markets are keeping a keen eye on. Apart from that, the US has extended the US debt limit for 3 months. Remember, the markets have been jittery over the last 1 week on expectations of this as well, on whether US would let it extend, and that really seems to have worked quite well, because most of the brokerages are of the view that in the next 3 months the treasuries would be able to raise enough cash and be able to handle the situation by the mid of December. Remember, it was the deadline of borrowing limit by 29th of September and also the spending bill that needs to be passed by 30th of September are the two important deadlines for US, and one of them, of course, clearly has been averted by an extension on that. The other important thing that the cue that also comes in from US is that Fisher departure by the early next month is something that's adding to uncertainty in the US Fed policy making. Janet Yellen also her term also is headed for an expiry in the early next year as well. So the markets would want to watch out for on who's going to be the next head when it comes to US monetary policy meetings there. That's not all, because if you look at the international markets, we also are watching out for the geopolitical concerns, especially arising out of North Korea. There are statements on how North Korea could actually go forward with a missile launch before September 9th, which is their independence or a founding day. And final thing, it is also about the Category 5 Hurricane Irma, which is expected to make a landfall by this weekend into Florida. So there's a whole host of international cues on the geopolitics, weather and political uncertainties as well, which are supporting gold prices at this point in time. Navneet Damani then joins us to talk about that and strategies as well. Navneet, hi. How do you read the global cues, and what's your sense on how the gold should be traded as of now?
Well, good morning, Manisha. As you mentioned, there are a host of factors which are impacting the market at the moment. Predominantly, we've seen dollar index being very choppy. Yesterday was a surprise where we got some kind of news on the debt ceiling front. We were expecting some kind of news to crop up on the October meeting, because the ceiling was expiring on the 29th of September. So the 3-month extension is a good positive development, and that's what is reflected on the bullion prices which came out on the weaker side in the yesterday evening session. But my sense is that the underlying tone still remains bullish. The geopolitical tensions still continue to maintain a strong footing, and as you mentioned, that the North Korea Foundation Day could be another big trigger, where they have announced that there is a probable chance of one more missile being test fired, and that could lead to some more arising of the geopolitical tensions. So all in all, gold could be bought on any dips toward 30,000 levels, with stops below 29,850, targeting 30,250, 30,400 on the upside in the very short term.
While all of these events, of course, will impact the gold prices and other asset classes as well, the crude oil prices, investors also seem to be very keenly watching out for some of these, because Hurricane Irma is expected to bring some damage to oil infrastructure, and the North Korea thing also is impacting the crude oil markets there. Between the two of these, how do you take cues for the crude oil strategy then?
We've seen crude oil bouncing around over the last couple of days, primarily because Hurricane Harvey has done much of the damage, and we've seen prices correcting. But now most of the refineries are gearing up and coming back in action, and we've seen drawdown of gasoline inventories over the last 2 days. So that's kind of showing that some kind of demand is now arising from the US refineries. There was about 3.8 million tons of refinery which had gone out of production, and which could be coming back into action. I think for the short term, bias could be on the positive side. We've seen $45, $44 on the lower side, and probably we are headed higher towards $50, $51, which is the range prices have been following for the last 1.5 months or so.
Okay, all right, Navneet, as well as Manisha, thanks very much for joining in, taking us through what's happening in the commodity space. Back to equities then. Ashwini is with us to tell us what he is recommending at 11:30 a.m. today. So Ashwini, over to you. We've come off the day's high, but nonetheless Seems that we're still holding above 9,900 as of now. Your index strategy plus stocks?
Well, this is a great time to get long on the Nifty as well as Bank Nifty to take advantage of the dip. Your stop should be, on the Nifty, say below 99.20, and on the Bank Nifty, possibly, below 24,300. So the stops are fairly close by, and I believe, second half we'll probably go and retest the morning high. The morning high is significant because that is where, previously rallies have stopped, and if we can decline, not towards the previous low, chances are that this time around 24,450 and 99.80, 10,000 may just get crossed. So at least a retest of those levels, and let's see how it plays out from there. So this is the time to buy into this weakness. As far as individual stocks are concerned, Century Ply is a buy with a stop of 245, target of 262. Arvind is a buy with a stop of 392, target of 415. And Vedanta is a buy with a stop of 317, target of 332.
I mean, this big run that we saw in NBFCs yesterday, the market was down, but NBFCs were really surging. We're not seeing large amount of follow through there. Some yes, but not large scale, right, Ashwini?
See, large scale follow through will come once, the market breaks out. But by rotation, they are moving. Today, Motilal Oswal is up a lot. So, every NBFC cannot move up every day. But by rotation, today, Indiabulls Housing is moving higher. Bajaj Finance, after yesterday's gains, is still higher. So, slowly, this is the sector. If anybody can't still make out, then they have a problem. But it's clear that the market leading group is now beginning to make fresh highs, even while the market is kind of consolidating.
Okay, Ashwini, just hold that thought. We need to take a mandatory break, but we do have those Twitter queries to address. So we're just going to come back with them. Stay tuned.